I mean, yeah, after last week, there is a heck ton of bargain buying. I mean, there hasn't been very much, more news that people are biting on. We're seeing a big increase in large caps. That means money's flowing back into those plays like Tesla and Amazon. Nvidia really made a big jump this week. But I wonder if it's just moving back into, these ones that have been oversold. I mean, like I said, there hasn't been any news really. I mean, you take a look at the economic calendar, and sure, on Wednesday we had our consumer price index. And on Thursday, we had our producers price index. Layman's terms, that's, retail inflation and wholesale inflation. And they kind of came in where they were expected. When you take a look at our FedWatch tool, I mean, this is what we're seeing right now. But just yesterday, this has been flip flopping. This is basically what investors have priced in for this rate drop or rate cut that might be happening next week. The Fed has alluded to it. And as you can see here, it's about 50-50 today. Yesterday, it was slanted more towards just a quarter point rate drop. But right now, is the Fed going to drop a quarter point or are they going to cut a half point? I mean, the Fed has continued to say, Sip, that things are measured. And so, I'm actually putting my credibility into a quarter point rate drop, but you can see the market is kind of unsure on what's going next. But no real news, and that caused some buying this week.
Although the inflation news is kind of one of the main drivers, right? And inflation was for the most part flat,
Calm.
right? It's continuing to kind of stay in that range. So inflation isn't the a big metric to drive, Fed this. Employment could be the
Yeah.
next one, right?
Any sort of weakness. So remember, the Fed has this dual mandate. Not only do they have to keep price under control, and let's keep it clear, the inflation is more around the 2%. It's actually closer to the 3% target, or 3% number, but that's very close to that Fed target rate. That still means things are inflating. It means that they're inflating at a slower rate, right? We don't want things to actually contract, right? We don't want it to go below zero and things to contract. We just want it to be measured. We don't want it to be up in the 6% or 8% numbers that they were a couple of years ago. We want it to be down at like 2%. And it's between 2 and 3%. But you're right. The other mandate of our Fed is this whole employment thing. And, they have to, their goal is to keep as many people employed as possible. And if there's any weakness there, then the Fed's going to, want to take action.
Awesome. And do we want to look at where the markets are kind of in relation? Because I saw a tweet this today that we're only 1% off from our all-time highs, and
Yeah.
so that speaks optimism when I see something like that.
Yeah, there's definitely this resistance level that we're approaching. We got a reversal, Sip, and I was expecting this reversal to come after a little bit more of a pullback. When we use my favorite retracement analysis to make sense of things, we start to, I'm going to throw my rulers. Everybody likes to see my rulers. I get lots of comments on my rulers. When we pulled back to basically just the center zone or the halfway mark of the previous retracement, that caused us to kind of recalibrate our look at things. And so basically, you can see here that according to this analysis we use, we basically, in the beginning of August, started on a new path and kind of finished the old path at the end of August. And we're seeing where we go next. Now, I wouldn't be surprised if we kind of get another reversal around the all-time highs, which is around 5,650, 5,665. That's the zone I expect us to get, another reversal at. I don't expect us to get up to the 5,700 range, which would trigger us to start thinking that people are going to start piling into the markets again. In fact, you're still seeing gold's at a new all-time high around 2,600. Let's just take a look at that really quick because I don't want to be misquoted here. If I pull up my favorite CNBC lookup tool here and pull up gold, I think we're trading around the 2,600 range. Let's take a look. Boop, 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 boop. Yep, $2,604.20 is where we're currently trading with gold futures. So, there's still a lot of trepidation. It just so happens that things sold off, especially in those big name stocks, so much last week that money just kind of naturally flowed back in. I wouldn't get too excited about, kind of a bull market forming. If anything, I think we're still in this sideways chop as we're trying to figure out the difference between quantitative tightening, interest rate drops, the new presidential election. There's a lot of confusion. There's a lot of money that maybe wound up in the markets over the last 6 months that really shouldn't have been there. So that's kind of fizzling away. So I expect, if anything, some sideways chop. I'm also paying attention to any sort of consolidation sip that might be forming. That would be a whole different take on things. It's a little too early to say that's happening, but you know, I don't expect us to go much higher than about the 4,600, 675, 650 range.